Well, good morning and good afternoon, depending upon where you are. Welcome to the July 2024 WASDE report webinar on July the 12th. My name is Greg Horstmeyer. I'm the editor-in-chief at DTN, and I'll be your moderator today. With me, as always, is Todd Hultman, our lead analyst for DTN, who'll be sharing his insights and talking about the report that just came in here this morning from USDA. A reminder that this event is all participants are in a listen only mode, but you can ask questions at any time. To do that, click on the Q&A option that's located in the lower right part of your screen. That should open up a messaging panel and you can type questions into there and send them. We'll address those questions at the end of the webinar after Todd is done, but you can submit them at any time as they come to your mind. And actually that helps because it lets us sort of think about the questions that are coming in and rank them. Also, this event is being recorded and it will be available as a rebroadcast link on the DTN website within 2 business days. The web address for that website is dtn.com, and it's in that same events area that you go to when you signed up for this webinar to begin with. With that, we're ready to begin the webinar. Todd, I'll turn things over to you. A little bit of bullish news, but kind of a mixed bag today. What do you think?
Yeah, there was a nice surprise, and it's going to take a little explaining on the corn numbers today, so bear with me. But I have to say it is nice to see things, at least for the corn numbers, turn out the way they did today. The title of this, July WASDE inserts USDA planning estimates. That's typically the main thing that happens in a July WASDE report. You know, we had the planning estimates from the June 28th report, and we had ending stocks. And usually the findings of those two things get plugged in to today's report. Now, keep in mind, these planning estimates are still more in the office and indoor paper work than they are anyone actually being out in the fields looking at what's happening and going on. And I understand if you're a producer in Minnesota, you have to really be scratching your head over some of these national estimates USDA still has. So unfortunately, we won't get more evidence until a little bit in August. The better estimates for production tend to come in October. So it's going to take some time, I think, for USDA to get on board. And in the meantime, there's still a bearish bias to the corn numbers. But with that all said, let's dive in and take a look and see what USDA said for corn today. This is the U.S. balance sheet. The newest crop season estimates just out today are the far right column, and the far left column is the current season that we're in, 2023 to 24. And we start with some lower estimates in that regard. I have to say, just to put this in context, that, well, let me just jump ahead and mention that the ending stocks estimate for the current season fell to 1.877 billion bushels. That's down 145 million bushels from last month's estimate, and is part of the bullish surprise here. And the reason I say that is because in the June 28th report, if you were with us, USDA estimated 4.99 billion bushels of corn on hand, which made it look like kind of a sluggish demand scenario. But here in this report, we're going to see that USDA increased the feed demand estimate, and this is all in the left column for the old crop season that we're currently in. USDA increased that feed demand by 75 million bushels and increased the export estimate 75 million bushels. So that gave quite a boost to the demand outlook in spite of the bearish looking June 1 corn stocks report. So I have to go back and just say in that June 28 report, when corn stocks came out at 4.99 billion bushels, that was the one number I just could not wrap my head around. We've had active demand on all 3 legs, exports, ethanol, and feed. We know that the evidence was good. Our corn basis has been improving, and we'll get to that in a little bit. Still improving as we go and as prices keep falling lower. And so I just couldn't understand, and the demand estimate that USDA suggested in that June 28 report uh, was basically assuming that we've had less demand than we did 2 to 3 years ago when we had much less corn available. So nothing made sense to me from that point of view. Today's WASDE estimates make more sense to me and are much closer to expectations. I was thinking old crop ending corn stocks should be around 1.8 billion bushels. And so this certainly gets us closer to that number. So honestly, I don't think USDA has a good explanation of the contradiction here. And in fact, in today's report, they said that the June 1 corn stocks number is what led them to increase feed demand by 75 million bushels. So that just doesn't make a lot of sense to this simple thinking person anyway. But granted, however it happened, I think USDA came up with a more accurate estimate today on the old crop side. So again, that ending stocks number increased 145 million bushels. It's now 1.877 billion bushels. And of course, that will give us lower beginning stocks in the new crop season. So the increase in demand also helped the new crop ending stocks number come in less than expected. That number, if you see in the right rectangle in the far right column, the new ending stocks estimate now for corn is 2.097 billion bushels. So that's just 5 million bushels less than what was expected a month ago. And I can tell you that's much less bearish than the 2.27 billion bushels that Dow Jones survey of analysts was expecting today. And I don't think the analysts necessarily made a mistake. They were just assuming, like everybody else, that corn stocks number was so big, we were going to have a lot more ending stocks in today's report. But thanks to the surprisingly good show of demand, mostly in the old crop season, we have not nearly as heavy of an ending corn stock estimate today. The other changes that were made for the new crop season, of course, the 91.5 million acre planting estimate was plugged in at the top, just as we thought it would be. And along with that goes the lower or the higher harvested acre estimate of 83.4 million. The yield estimate did not change today. USDA is just not seeing enough evidence apparently from their weather view to tinker with the yield estimate yet. But as I say, it'll be September before they get out into the field and have objective yield surveys. So we still have a lot of uncertainty in this production estimate, but for right now, it stands at 15.1 billion bushels, and that's very close to where expectations were for the production estimate here on Friday. For the demand side, we saw two changes. Feed demand in the new crop season was also increased 75 million bushels. So a little brighter acknowledgement of the feed demand for corn throughout the country. And of course, we've talked about, if you look at the counties that have heavy livestock in their counties, you'll see very strong corn bases in those regions. So around the Texas Panhandle or in northwestern Iowa or south central Nebraska, you'll see very heavy or very strong basis for corn. And I think that supports USDA's acknowledgement here of better demand from feed. We also saw a 25 million bushel increase in the export estimate for the new crop season. Of course, we have a long way to go before we can prove that out yet, and that new crop season hasn't started yet. So, but at the end of the day, 2.097 billion bushels is the new ending stocks estimate, and that puts us at roughly 14% stocks per use ratio. We're still looking at the highest ending stock situation in 6 years. The average farm price, USDA adjusted down from 440 to 430, and of course the strong hit of corn prices from the speculative sector has not helped that outlook yet. But the new season hasn't started yet, so we still have a ways to go. Let's take a look at the world estimates. This is the old crop or the current season for South America, I should say, and the only significant change there was in the estimate for Argentina. Instead of 53 million metric tons, USDA came down to 52. Local estimate from Buenos Aires there is 46.5. So there's still a bit of a gap between USDA's view and the local view. The estimate for corn production in Brazil stayed unchanged at 122 million metric tons. USDA staying very stubborn and firm in its higher estimate there. CONAB had its new corn estimate released just yesterday morning, Thursday morning, and they increased their estimate of corn production from 114.1 up to 115.9. So as it stands right now, both CONAB and the International Grain Council are in the 115 to almost 116 area for Brazil's corn estimate, while USDA stays at 122. Now let's go to the new crop table for world corn. And in the upper right corner, we see just a slight increase in the overall estimate of world ending corn stocks. Instead of 310.8 million metric tons, we're now looking at 311.6. And that's really not much of a change in the world picture there overall. For Argentina and Brazil, keep in mind these crops won't even be planted till this fall, but the higher expectation for corn production persists. Well, I should say roughly the same corn production expected for Argentina, but a little higher crop expected in Brazil again next year. And of course, they continue to expand acres every year. So that's been a very tough trend for the U.S. Lastly, I just wanted to point out China, the world's largest producer of corn, that nothing's changed there in this month's estimate. 292 million metric tons is record production, if that comes true. And the demand level of 313 still about the same there. So China's still not able to completely stay self-sufficient in corn. Will be somewhat dependent again on the export market in the year ahead. Okay, how do world corn supplies compare over the past several years? And again, I like to exclude China from the metric because number one, it's hard to trust the big ending stocks number that USDA has for China. And number two, China is not really an exporter anyway, so their ending stock supplies only matter within their country. They don't really have an effect on world corn prices. So among the rest of the world, except for China, USDA is estimating 3.89 billion bushels of global ending corn stocks, basically very close to the same level as last year. So we had been anticipating higher, but now we're basically the same level we've been in the past 3 years expected for the new crop season. Not a big change in the overall world outlook. How are corn exports doing? Well, we did hear USDA increase the export estimate today, 75 million bushels, so that's encouraging. Frankly, I thought there was a chance for a small increase in the corn export estimate. I did not expect 75 million bushels. As this chart shows, the red line is where our shipment pace currently is. The most recent report is as of July 4. 1.77 billion bushels of corn has shipped. That's up 27% from a year ago. The green shaded area is last year's pace. The black line is the 4-year average. So we're still just a little bit below the 4-year average, but obviously doing much better than a year ago. And frankly, it's a lot easier to get corn export sales with $4 corn than it was $6.50 corn. So that's helping us compared to a year ago. But the one reason I thought there was a chance for at least a small increase in the export estimate is because as far as corn sales on the books go, we've already exceeded USDA's prior estimate of 2.15 billion bushels. It's just a matter of getting that shipped before August 31st, which is just less than 2 months away. So I think there is good reason for USDA to raise the export estimate. But as I say, we'll see if they can make a 75 million bushel jump or not. Ethanol margins, extremely attractive. And of course, as you can see, the blue line here represents USDA's estimate of corn processing value in Iowa. So when you take a bushel of corn to the ethanol plant, what's the value of that corn after they turn it into ethanol and corn oil and distillers grains? And the answer as of July 1st was $7.12. Well, the price of corn on DTN's National Index of Cash Corn Prices on July 1st was only $3.92. So obviously you've got a very wide profitable spread there for the ethanol plant to work with, $3.20. So that's keeping the ethanol plants as strong, healthy bidders. Now, why did it widen out the past several weeks? Well, I think part of that has to do with the flooding that we saw in Minnesota, northwestern Iowa, southeastern South Dakota. There was some difficulty in shipping ethanol after that flooding occurred. A lot of bridges out, roads closed, rail lines were messed up from the flooding. So we saw the price of ethanol, for instance, in Chicago, jump higher on this news. So this will balance out in time as that transportation comes back. But right now, it's clear and obvious that the ethanol plants are doing quite well in this environment of cheap corn, and at least that's good news for the demand side on ethanol. And one reason that I, I still had a hard time believing those June 1 corn stocks. The corn basis also very strong, and this tells me that farm producers are hanging on to their corn. They're being very stingy about letting it go at these lower prices, as is often the case when we get to painfully cheap levels like this. As you can see from the red line, that's this year's basis versus the September contract. We've seen steady increases really that goes all the way back to the harvest period last fall, but especially since May, we've seen another surge of strength as corn prices have come down lower. So the producer side is doing what they should be. They're resisting these lower corn prices, and we're just going to have to see how this turns out with specs heavily invested on the short side of the market. But right now, that's a very good sign, not only of producers resisting the lower prices, but also of the demand that we have for corn. And this is another reason why I had real problems with that June 1 corn stocks number. And it's ironic because I've been one of the strongest proponents of USDA's quarterly grain stocks numbers because they're, when they take inventory, it's hard to argue with. But this is one case where it just didn't seem to match the facts. And not that there hasn't been cases before on that. So anyway, lastly, before we move on to, well, I've got one more slide here for corn, but I wanted to point out just how heavy the speculative investment has been in the short side of the corn market. So this is the most recent CFTC data, shows non-commercials, meaning large speculators holding short positions in corn. We're holding over 542,000 contracts short. Now, those aren't net shorts, those are outright short contracts. The long side of the market for speculators, we're long 313. So what we see here, especially since May, is a sharp increase in short positions from the spec side of the market as prices were falling lower from their May highs. And it's quite likely that they've been pyramiding their positions as the market has fallen lower. Now that adds a lot of selling pressure to the market. It's roughly 2.7 million bushels that specs of supply, specs are theoretically adding to the market right now with their short positions. But the tough thing is that if they've been pyramiding on the way down, then they've got some even larger positions at these lower prices. and that's where they may turn out to be a bit vulnerable on this position. We'll see, and it'll depend on weather and how the rest of the year goes. But the last time specs were outright short this large of a position was in April of 2019, and it was a bet that turned out very badly for them. So I just wanted to point out that yes, specs are big. They can move the market seemingly at will at times, but that doesn't always mean they're right. And usually when they have the largest position on, or they're the most confident in a large position, is when they're also the most vulnerable. That's the best I can say for the current situation. Cash corn opportunities. How does this year's cash corn price compare in terms of profitability to previous years? Well, the blue bars that you see on this chart is DTN's National Corn Index, which is currently around $3.92 a bushel, and it's divided by USDA's cost of production estimate. And there's one very interesting thing about the current season in terms of profitability, and that is so far we have not been offered even a break-even price. And that since we've had an ethanol market for corn, that's only happened once before, and that was in 2017. You see that highlighted with the red arrow on the left with 2017. Now, we've been to more painful prices before in terms of profitability. The Asian recession back in 1998 to 2000 was horrible for the corn market, and corn prices were even worse in terms of profitability that back then. I mean, they got to like 40% below the production cost, where today we're about 22% below USDA's estimated production costs. So the market's been worse, but since we've had an ethanol market to help support us, especially when prices get cheap, there's only been 1 year where we didn't at least have a shot at coming close to a break-even price. That was 2017. And I'll probably have to expand on that later, but there's a lot of similarities in the balance sheet numbers between this current season and then. It's kind of interesting. So anyway, the year's not over yet. We still may get that shot at the higher price, but obviously it's been very tough lately with specs so confident about their short positions. Okay, soybeans. USDA, we did not expect much change in the ending stocks estimate for soybeans today. And frankly, we didn't get much change, but they are slightly lower, both for the old crop season and the new crop season. In the left column, you see the new ending stocks estimate of 345 million bushels. That is down from 350 was estimated in June. There was a slight tweak in the import number. Let's see, what else? Oh, maybe that was, or I'm sorry, down 5 million bushels from June's estimate. And that came as a small tweak, and the import estimate was increased to 20 million bushels. The new crop ending stocks estimate, expected to come to 445 today, actually slipped to 435 million bushels today. So not much change there. The average farm price USDA is expecting is $11.10 for the new crop season. And the production estimate was brought down slightly, and it's largely because of the lower planting estimate that we got in the June 28 report. So you can see at the top, the planting estimate 86.1, slightly lower harvested acres of 85.3. Just like corn, they kept the yield untouched in this report at 52, and that has yet to be proven one way or the other. So again, we have plenty of season ahead of us. Right now, looking at a 435 million bushel ending stocks estimate, and that works out to 11% of annual use. So typically a 10% ending stocks to use ratio is break even, so we're just slightly above that in historical terms. On the world estimate for soybeans, this is South America's current season still. There was just a slight decrease in Argentina's crop estimate In the second column, instead of 50 million metric tons, USDA now has Argentina at 49.5. The local estimate for Argentina is actually slightly higher at 50.5, so they're not too far apart though. The estimate for Brazil's soybean production still high, still unchanged at 153 million metric tons. We've got CONAB estimating 147.4, and the International Grain Council splitting the difference at 150. So somewhere in that range, but again, USDA and CONAB not agreeing. The only other thing I wanted to show you on this old crop season balance sheet is the import estimate for China, which is the third column from the left. That was 105 million metric ton last month. USDA acknowledging China's had very strong demand activity for soybeans, increased that estimate to 108 million metric tons. Unfortunately, most of their increased demand for soybeans has come from Brazil and Argentina. We haven't seen we've seen some interest lately, obviously, in our old crop sales to China, but most of that, the lion's share, has come from Brazil. Moving and overall, the overall soybean stock estimate from USDA did not hardly change today at all. In the upper right corner, it's 111.2 million metric tons, basically the same. Now for the new crop estimate, I'll just point out in the upper right corner again, we're looking at a very slight reduction in the ending or in the soybean stocks estimate. Instead of 127.9, it's now just below 127.8. So again, really no significant changes in the numbers today. I just highlighted the South American estimates because that's what'll have the big impact on the future of the season ahead. But again, these South American crops won't be planted till fall. They all stayed unchanged in today's estimate. And the big boogeyman that continues to haunt the soybean market is the estimate of 169 million metric tons of production for Brazil. That suggests another sizable increase in their cropland planting for soybeans in the year ahead. So we have that to look forward to. Soybean exports today, the old crop estimate stayed unchanged at 1.7 billion bushels, and that was a fair assessment as the soybean shipments are basically on track. They're a little below pace. As with corn, we already have enough soybean sales that we've surpassed the 1.7 billion bushel estimate, but we still have to get those soybeans shipped the next 2 months. And frankly, the shipment pace has been a little slow, as you can see by the red line on this chart. So as of July 4, we've shipped out 1.52 billion bushels of soybeans. That's down 16% from a year ago, and we just need to pick up that pace a bit if we're going to reach that goal by the end of August. The processing value for soybeans continues to remain impressively firm, and to me that's surprising given the sell-off that we've seen in soybean prices themselves. So again, the blue line on here comes from USDA's weekly report. The last one was as of July 1st, and it showed that the value of oil and meal that you get from crushing a bushel of soybeans has a value of $14.31. Excuse me. And that is well above the cash price of soybeans, currently around $11.05 as of July 1st. So we continue to see a very wide margin for processors to be encouraged to keep buying and crushing soybeans. They're being rewarded handsomely. In spite of anything negative you heard about renewable diesel markets or sustainable aviation fuel or all of that, this is where, again, I keep saying the rubber meets the road. And as long as processors are making these kind of margins on turning soybeans into meal and oil, they're making very good money here. And the domestic demand for soybeans remains very strong in spite of Brazil's continued domination of the export market. Season to date, soybean crush is up 3.5% from a year ago. So that's a nice, healthy increase from what was also an active year last year. The soybean basis, we can see that the basis has firmed since soybean prices have fallen in May. So there is that sign somewhat of crush demand having a local effect of keeping the cash bids relatively firm is probably the best way to put it, because obviously we're seeing a lot of selling pressure from specs in the futures market. But thank goodness for the crush demand. It's at least holding the soybean basis more firm than it has been earlier this year. From DTN's National Soybean Index, the basis here is 41 cents below the August contract that's tied for the fourth weakest in 10 years. So it's not great, but given the situation and the competition we have from Brazil currently for exports, it's doing fairly well. How is the spec situation in soybeans? Historically, it's not quite as heavy as what we're seeing for corn, but it's still, you can see on this chart from the red line, the short positions that specs are holding. You can see there's been a real big increase in the number of shorts just the past several weeks as soybean prices have fallen to new lows. So, and I'll say we can blame the specs for driving prices lower, but I think we also have to acknowledge some reality that, specs are doing what they get rewarded for. And as long as they're exposing some weakness in demand currently through the summer season, and maybe part of that's being taken advantage of by these high early crop estimates from USDA, specs will continue to do what they get rewarded for. And right now they're being rewarded for being short in soybeans. So there's no threat on the position just yet. But again, as in corn, when they get big numbers on the short side of the market and you have historically cheap prices, as corn and beans both are, there does come a time when they get vulnerable. So we'll just have to see how this season turns out. I think there's still a lot of uncertainty ahead. Wheat prices. This was the bearish surprise of the day. And I'll just spill the beans and say we have a new wheat crop estimate, production estimate, over 2 billion bushels. It's the third arrow from the red arrow from the top on the right column. 2.008 billion bushels of wheat USDA is estimating from this year's harvest of both winter and spring wheat and durum. And that is the 8th largest wheat crop we've had in 8 years. So we've skated by the past few years with drought limited crops, but not this year. We're seeing USDA estimate the 8th largest US wheat crop that we've had. So that definitely was a bit of a bearish shock today. The Dow Jones survey was estimating 1.91 billion bushel crop, which still would have been a 5-year high, but this is even higher, so it's going to add to our U.S. Wheat supplies. The planting estimates from the June 28th survey, USDA did come in with higher harvested acre estimate, 38.8 million acres. That showed up today. The yield estimate is up 2.4 bushels an acre to 51.8 now. Those harvest anecdotes we're hearing mostly for winter wheat at this time have been overall favorable. And of course, we have a much better soil moisture profile this year than we've had the past 3 years. So we're seeing the results of that here in today's estimates. The new ending stocks estimate for wheat in the new crop season, 856 million bushels. That is a 44% ending stocks to use ratio. So that's back on the heavy side for our U.S. Wheat supplies. And by the way, that'll be the highest ending stocks to use ratio in 5 years. So we're back to a bearish situation there, obviously. And I'll just point out in the left-hand column, the June 1 wheat stocks total 702 million bushels was translated through here. That, of course, is the ending stocks number for the 2023 to 24 season. So that came in as expected, but it was the big estimate of the wheat crop that really showed up bearish for wheat today. And last I looked, those wheat prices were showing double-digit losses while corn and soybeans were steady to a little higher. I'll try to remember to check in before we sign off here. This is the world supply and demand table for new crop wheat, or actually it's the current season that we're in now. Now that we're here in July and the new crops being harvested, well, the winter wheat crops are being harvested around the world. In the upper right corner, you see a higher world ending stocks estimate for wheat of 257.2. That's up almost 5 million 5 million metric tons, excuse me, from last month's estimate. So, and most of that, of course, is coming from the higher estimate for the U.S. There were some tweaks to the other production numbers. So I'll just going down the list in the big rectangle on the left, I'll just point out that Argentina's crop was tweaked 500,000 metric tons higher to 18. Australia stayed unchanged at 29. Canada's wheat production estimate was tweaked higher from 34 to 35. They've also had good spring wheat ratings early this year, just as the U.S. has. And in Europe, where conditions have been excessively wet, especially in Western Europe, their production estimate was tweaked 500,000 metric tons lower. The estimates for Russia and Ukraine stayed unchanged this time around, USDA keeping Russia's estimate at 83 million metric tons. World wheat supplies still compare favorably when looking at the past several years. So again, excluding China because they are not a major export source of wheat. If we look at the rest of the ending wheat stocks, USDA estimates 4.5 billion bushels, which is a little higher than last month's estimate, but it's still the lowest in 17 years. So overall, we can still say that when you have global stocks of 4 billion bushels plus available to the major exporters, that it's still a comfortable supply overall, but there's not a lot of margin for error should anything else happen. And it is on the lower range of what we've seen the past 17 years. So that's quite a long time. How did the winter wheat production break out today? Well, basically all the main categories saw higher estimates. And let me get, yeah. So all wheat production, as I mentioned, was just over 2 billion bushels. The new winter wheat estimate, 1.34 billion bushels. The trade was looking for 1.32. That's higher than a year ago, obviously. Hard red winter wheat came in above expectations at 763. The market was looking for 745. Soft red winter wheat came in at 344 million bushels, just as the market was expecting. White winter wheat came in at 234. That was a little higher than the 227 Dow Jones survey was expecting. Spring wheat came in quite a bit higher, 578 million bushels. Dow Jones survey was expecting 525. So that's almost 53 million bushels higher on the other spring wheat crop. And of course, the ratings have been very high in the Dakotas and Minnesota, if you've seen them in the crop progress report lately. So they seem to be off to a good start, while some of the western areas have been quite dry and are very hot this week. And finally, durum wheat coming in much higher than expected. The trade was looking for 71 million bushels. Durum wheat production now estimated at 89 million bushels. So that's quite a jump from 59 a year ago. The HRW wheat basis finally has a little bit of something to brag about here. We've seen an improvement in the HRW wheat basis since early June. And the bad news is it's coincided with how prices have fallen the past month, but at least there is a little hints of better demand this time around. We do see total wheat export sale commitments up over 42% from this time a year ago. Now that's only after a month worth of being in the new crop season, but still, it is nice to see a little more export demand for wheat in general, and here it is showing up a little bit in a slightly better uh, basis for the HRW wheat prices. So compared to our national index of HRW wheat prices, the current basis is 43 cents under the September contract. It's basically right in the middle of what we've seen the past 10 years for this time of year here in early July. And the fact that it's holding up fairly well through the harvest season is a little bit encouraging. But obviously, in the bigger picture, wheat prices are feeling pressure today from the higher production estimate. The speculative position that we see in wheat looks very similar to what we see in corn and soybeans, as you can see by the red line on the chart. As wheat prices have sold off the past month to month and a half, we've seen quite a jump in the speculative wheat short positions that are on. But I'd just like to point out that, in basically March and April, wheat prices were pressured to their 3 to 3.5 year lows, and specs put on a very heavy position at that time. Well, then they got burned a bit because wheat rallied on some weather concerns and they had to cover a lot of those short positions. Well, now they're returning back basically to the same price levels, but they're a little more timid, if you notice, about putting on quite as much position as they did last time. So it'll be interesting to see how this turns out. But right now, today's report certainly not helping wheat prices. And before I talk about our conclusion, let me just peek at the market quickly, if I could, and let us know that December corn is up 4.5 at the moment, 4.15 1/4. Nova beans are down roughly 2 cents, and our wheats are down 15 to 21 cents. So they are taking the production news quite hard on the wheat side. In conclusion, today's report is definitely, I think, bullish relief for the corn numbers. Those demand adjustments were not expected at all, especially after the bearish corn stocks report we had on June 28th. So that helps offset a lot of the bearish expectations that we had going into today's report. And that should help us have a less excessively bearish opinion as we move forward, because we really don't have a good handle on what the crops look like in the real fields out there in the real world yet. And again, we won't get those objective yield estimates until September. So we still have a lot to learn about just how big this corn crop's going to be. I would say that the July report could be maybe the most optimistic view of corn production this year that we may see all year. And so, um, and I know there's a lot of areas that look really good, but there's also a lot of areas that look very bad, and I'm especially concerned about producers in Minnesota and parts of Wisconsin where they continue to deal with that surplus moisture, uh, as well as a lot of very high yielding areas that got hit by flood and hail this year. It just seems to be a lot more of that type of loss than typical, and we'll find out when we get to harvest. But for soybeans, I'd say today's report was neutral. Probably little argument on that. There wasn't a lot of change in the ending stocks estimate for the U.S. or the world situation there. And for wheat, it was definitely bearish to see that higher than expected production. That's the highest crop we've seen in 8 years. And we'll add to supplies at a time when it continues to be very tough to find exports that will compete with Russia. And then lastly, world ending wheat stocks were a little higher, but it's really the U.S. production estimate that's weighing on prices today. Well, this is a great time for questions, Greg, and if we have some, I'll be glad to take them.
Yeah, thank you, Todd. Yeah, we do have a couple in there and still some time to submit some more. One of them is sort of in a general situation. You talked a little bit about the where corn prices are and expected to be versus production costs, and you compared those to a couple of years in the past. The question is that with inflation at the high level that it has been, doesn't that make things even a little more bearish on farmers than what just looking at cost of production would entail?
If you change the word inflation to interest rates, I'll agree with you. And that's what's really hitting the farm right now, and that's also reflected in the higher production costs. And it's also maybe not appreciated as much in the high cost of holding back corn at a time, when we're trying not to cave into painfully low prices. So it uh, uh, just to clarify a little bit, or maybe from my perspective a little bit, I think the higher pinch of interest rates is the real pain point there. As far as the inflation itself, that's one reason that I compare current prices to their production costs, because you really can't go back to previous year. I can't go back and compare today's corn prices to 7 years ago on a flat outright basis, and I can't use the cost of production or the consumer price index to factor the change, because that just doesn't work. But comparing it to the costs of production, I think, does give us an apple to apple comparison, whether I'm looking at prices in 1980 or 2024. So I hope that helps answer that.
Yeah, but inflation or interest rates rather being the more punitive thing.
Yep, that's the real pain point. Yep.
Yeah. Another question, this is on soybeans specifically, but you noted that the production for Brazil is expected to be up, and you speculated that that's probably based upon USDA expecting more acres in production next year. Um, the comment is there's probably more acres in Brazil to plant, but isn't that production from new acres that are more marginal in terms of their yield potential? So might USDA be overstating that based upon as land comes into production in Brazil, it's increasingly more marginal?
Uh, yes. Um, there's always a chance they could be overestimating or underestimating for a lot of reasons. And one thing I will acknowledge is that as Brazilian producers take this tough pasture ground and turn it into a crop land use, it does take a lot of, oh, it's escaping me now, but I believe it's potash. It takes a lot of potash to make that work. And I hope I'm remembering that right. But it's an expensive process. It's not just that they can run out there, and harvest or plow up new ground. So there is an investment and a commitment, and I think thankfully that the difficulty of doing that has helped limit them to about 2 to 2.5% increase per year. So that's kind of about the rate of uh, cropland acre increase that I expect each year. And sure, early on, so far, the soybean yields nationally for Brazil have been fairly competitive with ours in the U.S. Their corn is not. Their corn yield this year is going to be about 87 bushels an acre, but on soybeans, they've been much closer to U.S. type yields. So it can't say that we've seen that it's hurt them a lot so far.
And interest rates an issue for them as well, I suspect, in terms of slowing that pace of production.
Yeah, and that's another good point, Greg, because earlier this year, there were a lot of companies that were very concerned about producer bankruptcies in Brazil. So we did see kind of a bit of their pain point on how low prices could go before it started causing problems with their producers, and they reached that earlier this year. So that's also a factor in how they perform this fall.
Another question, this one on corn. How do you think the hurricane, how do you think Beryl and all of the rain that we've seen coming from that has affected corn acres and ultimately production as all of that is headed north and inland?
Well, I have to say, I saw some pretty good pictures of corn in the Eastern Corn Belt, and I had some anecdotal reports from friends that also suggested they had some very good fields of corn before Beryl went through. Uh, and so, even though the drought map showed them abnormally dry, or in some cases there were D1 conditions in parts of the Eastern Corn Belt, I never really took too seriously that the Eastern Corn Belt was in too rough a shape uh, before Beryl came through. And then as Beryl went through this week, and we saw some pretty heavy rain uh, amounts from Illinois, northwestern Indiana, and southern Michigan, there were areas of flooding. And unfortunately, I hate to say, I got a picture from one of our customers of his corn that was just flattened right down. It reminded me of the derecho in Iowa back in 2020. And so, obviously we're kind of hoping and praying that that corn will bounce back up for him because it looked really good before Beryl came through. So I have a hard time in my mind saying that Beryl was, worth a 50 cent a bushel drop in corn that we've seen the past month, but the traders sure use that as an excuse to bang on the market.
The old rain makes grain.
Rain
We've
makes
seen that.
grain. That seems to be the only thing they learn.
Yeah, exactly. Exactly. I think that's all the questions that we have, unless somebody has one they want to slip in here at the end. Appreciate those questions, all good ones. Appreciate everybody's participation in that. If not, we'll wrap things up. Todd, really appreciate it. Thanks for sharing these thoughts today. We'll continue to watch this market and also watch what Beryl's doing. We're all looking forward to of course, next week's crop progress report will be in arrears, so we're probably really looking for 2 weeks from now crop progress report to see what Beryl may have done to some of those corn acres, but see how that plays out. I want to remind everybody that today's session was recorded, so there'll be a rebroadcast link on that dtn.com website within 2 business days next week in the events section. If you want to revisit this or forward that to someone else in your operation or a friend to listen to Todd's comments today. Also, if you have additional questions, Todd's email is up there. Please don't hesitate to send them to us. We love to get good questions in and answer those. Our next markets webinar, as Todd mentioned, is August the 12th. And I would just to say that that's a Monday. So the preview for that will be in early to mid, probably that week before, will be Todd's look at the preview of the market. And then bright and early Monday morning, we'll have that next report and followed up with a webinar at 12:30, just like today. This concludes our event. Thanks everyone for attending. And again, send in those questions if you have them. Hope you have a great weekend.
Thanks all. Best wishes.